Hello everyone, and welcome back to our channel. If you enjoy clear and honest insights about gold, silver, and the financial markets, make sure to subscribe. It really motivates us to keep creating videos like this. Gold just dropped hard, silver even worse. But here's the crazy part, this might not be a crash, it could be the best buying opportunity of 2026. Or, it could be a trap that wipes out late buyers. So which one is it? In this video, I'll break down 3 powerful reasons why this dip could go either way, and what smart investors are doing right now. Let's look at what just happened. Gold recently dropped from highs above $5,600 earlier this year. It even fell below $4,500 during the recent correction. Silver crashed over 10% in days and showed extreme volatility. But now, we're already seeing a rebound. Gold jumped back toward $4,550 and above. Silver bounced to around $72 and above. This kind of volatility tells you one thing, the market is confused and emotional. Reason number 1, this could be a trap. Let's start bearish. One big reason this dip might be a trap is interest rates and the strong dollar. Right now, central banks are still considering rate hikes. Bond yields are rising. The US dollar has been strong. And here's the problem, gold and silver are non-yielding assets. So when interest rates stay high, investors move money into bonds instead. That's exactly why metals dropped recently. Because markets expect fewer rate cuts in 2026. If rates stay high, this dip could go even lower. Reason number 2, this is a healthy correction. Now the bullish side. Let's be honest, gold didn't just rise, it exploded. It went up more than 50% in the past year. It hit record highs above $5,500. So what happens after a huge rally? Profit taking. Big players take profits. Markets cool down. This is completely normal. Meaning, the long-term trend may still be up, but the market needed to reset. Reason number 3, the big money is still bullish. Now here's the most important part. Despite the drop, the fundamentals for gold are still strong. Central banks are still buying gold reserves. Geopolitical tensions are ongoing. The dollar is weakening at times. Inflation fears are still alive. And long-term forecasts? Some analysts still expect gold to push towards $6,000 and above. That's why, smart money often buys during fear, not hype. So, trap or opportunity? If rates stay high, dollar strengthens, this dip could go deeper. But, if rate cuts return, geopolitics worsen, demand stays strong, this could be a perfect buy-the-dip moment. The truth is, this market will punish emotional investors and reward patient ones. So the real question is, are you reacting or positioning? If you want more updates like this, subscribe, because this market is just getting started.